Welcome to Stanford International University's Accounting Fundamentals Learning Management System. I'm Dr. Christopher Raymond. Accounting is the subject that converts all of a business's past financial performance, its current financial position, and all of its future plans into monetary values. Operations are measured as revenues less expenses, the owner's position is expressed as assets less liabilities, and investment and growth possibilities are valued from expected future cash flows. In short, accounting is the language of business. All businesses are required to use accounting techniques to measure their financial performance and position, if for no other reason than to calculate their tax obligations. This includes every kind of business, from banks to entertainment companies and even private hospitals. Even public and not-for-profit institutions like charities, non-governmental organizations, and government ministries are required to keep and use accounting information. Larger public corporations listed on the stock market are required to publish annual reports which contain their annual financial statements and other noteworthy business information. These financial statements provide accounting measures of financial position and performance which are used by banks to decide whether or not they should extend credit to the business, by investors to assess its risk-reward profile, by managers to judge their own performances, and by competitors and suppliers to help evaluate the structure of the market. Whether a student specializes in general management, marketing, logistics, or strategic management, he or she will be working with accounting information. Stanford International University's foundation course in accounting, followed up by its course on measuring and valuing financial performance, is designed to enable students to work confidently and insightfully with accounting information. To be clear, this is not a course sequence for beginning accounting students. Rather, this is a course designed for business professionals to broaden their skill set and better enable them to work with the business issues at hand. STIU's Foundation of Accounting course starts with a brief introduction of how accountants record, collect, and organize external business transactions. Here, students will be exposed to accrual accounting, which enables the profession to deal with internal non-cash events as well as with timing issues arising from multi-period events and transactions. Many internal and multi-period events are recorded at the end of the accounting cycle, when financial performance is documented. So an understanding of accrual accounting is crucial. Normally, businesses are treated as going concerns with an infinite life, but revenues and expenses are tallied up at the end of each accounting cycle. Knowing how accounting cycles can influence decision-making is a valuable insight that will be explored here. As a third follow-up topic, we look more closely at the structure and elements of the income statement and balance sheet. Of all the financial statements, these are the two most commonly used and most easily understood. As noted above, the income statement is a quantitative summary of a business's performance over the most recent business cycle, the bottom line as it is often called. The balance sheet, by contrast, states the book value as of the last day of the accounting cycle of all the business's assets and liabilities, that is, things that it owns and things that it owes. The difference between assets and liabilities comprise the owner's net worth in the business. Basically, owner's net worth, also known as owner's equity, consists of original and subsequent investments in the business, plus profits retained by the business for continued operations and expansion. The fourth topic in the course further explores the relationship between the balance sheet and the income statement. Briefly, as goods for sale are manufactured or purchased, they are recorded as inventory assets on the balance sheet. When these items are eventually sold, these inventory assets are removed from the balance sheet and their associated costs and revenues are finally recorded on the income statement. At the end of the accounting cycle, when revenues and expense accounts are closed, profits from the purchase and sale of goods and services during the accounting cycle are transferred back to the balance sheet through the owner's equity retained earnings account, and thus the accounting cycle is complete. As a fifth and final topic, the statement of cash flows is introduced. In its own way, this statement is more comprehensive than either the income statement or the balance sheet because it shows money inflows and outflows through all business accounts, both those that appear on the income statement and those that appear on the balance sheet. The cash flow statement provides an integrated view of not only financial performance, but also of the way in which cash is sourced and used. Understanding this flow provides great insight into the business as a dynamic organization, constrained by resources, tempered by its competition, and driven by its aspirations. As you go through each topic, make sure to write down any questions you might have, and be sure to bring them to class for further discussion.